In this video, I'm going to share with you guys how to use volume profile to identify these hidden levels in the market. Now, you may be saying, well, Mike, I can identify them by using Heikinashi charts. I can find them by using Renko charts or even range bar charts, and you are going to be absolutely incorrect. These levels are only going to be visible using the volume profile charts. The chart right in front of you is the same chart from the thumbnail. The only thing different is there's not a lady pointing to the level on the candlestick, and the background color of the chart is black versus the background color of the thumbnail as in white. Now, if you don't know how to set up volume profile on your charts, at the end of this video, I will link you to a video showing you guys how to set up volume profile on your charts. Now, when we look at this, we're going to be discussing minus development areas on the profile. And essentially what a minus development area is if you look right here, we can see the very thin portion of the volume profile. Essentially, everywhere else on the profile, it is protruding to the right way more than what we have by this little bitty area that we have right over here. And one thing that usually accompanies this area, or what causes this area to form on the profile, is news events and things like that. Now, one of the things I like to do is I like to go ahead and highlight this specific area called the minus development area in the profile. I'm going to show you guys a couple different ways in which I use this information. Now, you may be saying, Mike, how did you get this line to draw all the way across your chart? Well, it's very simple. If we come right over here to your drawing tools, I actually use right over here where it says the regional y-axis. I have it pinned to an F11 hotkey because I use it also often. If you want to learn how to set hotkeys up, I'll link that also in a playlist at the end of this video as well. But, essentially, when we have this line drawn out, and why I like to use the y-axis versus just drawing a box, meaning a rectangle, because if I were to draw this zone out with a rectangle, what happens, if I still want to use that level in the future, right? As more and more data comes out, I got to continue to push this level out. So to me, I don't really like doing it that way. Instead, I'd rather just use this tool right here. And a lot of times what we're going to find is we already know this level basically formed because there was, a lack of activity in this market where, there was, one-sided traders were basically being caught off sides, and the market squeezed up real quick without a lot of volume being traded right there. Right off the rip, somebody got caught offside, or some buddies got caught off sides. Now, the way this minus development area works is, one, I like to look for it as the market to turn back into this level and look for some type of rejection. Well, if you look right here, this down candle right here basically touches the upper part of that zone, and then we reject out. We get an inside candle, we break the top of that, bada bing, bada boom, the market goes back up. Now, let's look at another example of a minus development area. This one's going to be a little bit more tricky because we do have a little bit of a volume profile sticking out right over here. So what I'm going to do is I'm going to grab that tool once again. I'm going to draw my line across. You can see what happened. A big wide-ranging bar shows that there was inefficiency within this bar. Some traders got caught off sides, and look what happens. We push down. We get right back to the bottom of that. We reject down again, and we start coming back down. Now, there's two ways we can trade this. One, you can look for a rejection in the zone for the move back down, or two, you can play a regression of the mean, meaning looking for the market to trade back towards this level. What do we get? Two hammer candles right here. This candle breaks the top of it. Bada bing, bada boom. Another easy example of this trade. But even if we keep this level, this zone marked all the way out, because we have not made it back to the upper part of that zone, look what happens on the very next day. We come up into that zone, they slap it back down. We go up, we test the top of that zone, they slap it back down. And then we finally push up and out of that area. But now we've auctioned that area in the market. So now, the inefficiency has been repaired in this example. All right, so here's going to be another example as well. We have a nice distribution on the profile right here. Then we have the minus development here, and then we get into the rest of the distribution on the profile. And I do want to warn you guys, if you guys are not familiar with volume profile, there's no need to worry. At the end of this video, I am going to link you to a YouTube playlist to where you can get more familiar with volume profile. But essentially, I'd mark off this minus development area just like this. And one thing to note, the market came down. Where did we come back to? Oh, the bottom of that zone. The market comes down. We didn't quite make it back up, but then look what happens right over here. here, we get back into this level, we get rejected on the way back down, and then we come up again and we finally get through that zone. So again, it provides not only a great target location in the future, but it also could be a point of interest to where you look for the market to potentially reverse around these zones. Now, in these examples, I've been using the NASDAQ. Let's jump over and see if this also works on the S&P 500. So here's an example of the S&P 500. And again, this is only a few days earlier. You can clearly see the minus development area on this chart. If we go ahead and we measure right around this area right here, what do you think this day was right here? I believe this day was the CPI data. What happens during that time frame? Well, we know there could be inefficiencies in the market. Orders get pulled off the book, so there's a little bit less liquidity on the book. We get an explosive move up and you get traders caught off sides. Now, look exactly how this happened again. The market rallied up. Where did we come back to before reversing and going back up? Right back to the top of that zone. So if you're a trader where you like to play reversals off of a zone, this is going to be an awesome opportunity for you to have more levels to play reversals in the future. Now, I know I said one more example. I actually want to do two more examples. I was scrolling through the chart and I actually found this example right here. And this is a little bit of an oddball. This is not as clean as I normally like to see, but you can clearly see we have a distribution peak above us. We have a distribution peak below us. And when we look at this, essentially I want to measure off, or I want to mark off this zone right here. And this minus development area happened towards the end of the day. And you can see we closed session highs. The market continued to rally. We tried to make a run down towards that zone. However, it failed to hit it and the market continued to rally. So one of the rules I have is if we don't hit that zone that day or the next day or two, I go ahead and I disregard that level for quite some time. I'm not going to be hyper focused on taking trades down towards that level. So again, be very, make sure that you pay attention to what I just said. Go back and rewind this video if you need to, because that is going to be very important. The last thing we want to do is be stuck with a bias with this zone in our head. And as we scroll this chart, we can see we have not come back and visited that level all the way until over here on June 26th. So again, miles and miles away before that level was ever revisited. All right, so here's gonna be another example. Here's a minus development area. We have a peak above us right here. We have a distribution area right down below us. We have this minus development area sandwiched in between. This is going to be different than seeing these minus development areas at the high or the low of the profile. We'll talk about that in a later video. But in this video, when we're looking at these minus development areas, we want to see them in between two different distribution peaks. So again, one above us, one below us. And in this example, here was the candle that actually caused that, or where we had the inefficiencies in the market. Traders get trapped right along here. But one thing we can note, all right, if we're already, keying in that this could be potentially a target location in the future. Well, you might say, okay, well, maybe I'm a breakout trader and you want to wait for the market to break this zone right here. We had one touch, two touch, almost touched it there. And as soon as we slice through that level, could this not be a great target location on the way back, looking for reversals out of this area? Now, there are times where we just slice right through these minus development areas, but a lot of times what we'll see is the market will come back and we'll trade in there. Maybe we'll get one or two rejections around that level before going ahead and continuing in whatever direction the market is going to go ahead and trade in. And right here, I'll link you to two different playlists, one on NinjaTrader, tips and tricks, how to set up hotkeys, all that fun stuff. Check out that playlist. I have another playlist right over here teaching you guys all about volume profile. Now, if you guys are enjoying this content, please do me a favor, hit the subscribe button down below, turn on the bell notification, and don't forget to give the video a big thumbs up and leave me a comment down below with any question you guys have, as it will give me content ideas moving forward.